Yo, what's going on, traders? It's your one and only skill coach, Team Legend, and I'm super excited to have you all here today on this one. All right, today in this video, I will be teaching you how you can hold a trade for long. All right, because I usually get a lot of questions from traders who ask, Tim, how can I hold my trade longer? I always get this anxiety when I'm in a trade and I get out on time. Yeah, so I'll be teaching you a simple way you can actually hold a trade for long. All right, but one thing you need to understand is in the financial market, holding a trade for long doesn't really happen all the time. Okay, there are times it can be good and there are times it can actually not be good. But one thing is, if you can understand what I'm going to teach you right now, you'll be able to hold trade for long most of the times. All right, so are you ready to learn that today? If that's what you want to learn, then hit that like button to show me that yes, Tim, I love this video and I'm ready for it. And don't hesitate to use the comment section if you have any question. All right, your comment enables me know what you want, and then I teach you in other videos to come. For instance, this video I'm creating right now is based on the question that most traders asked me in a few videos of mine, and that's why I decided, okay, I have to make this video to teach you guys this. All right, so if this is your first time on this channel, you want to hit that subscribe button and turn the notification bell on. It's very important. And also make sure you hit the like button. Let's get started. So if you look on this trade right now, you will observe that I've been on a trade for quite a long time. This is where I took the entries from. There were actually 5 entries, as you can see here. All right, so I just placed them on the 5 lot size and I left them there and observing it and holding it for long. And I know a lot of people will say, hey Tim, why didn't you add more positions? Yeah, the thing is, in the forex market, usually I'm not kind of so greedy about the markets. That's why whenever I want to take my trades, you observe that most times I take all my trades at one zone. You can see, yeah. Unlike some traders who take one entry here, take another entry here, take another entry, take another entry, yeah, is also good. Yeah, is also good. But for me, I usually prefer to place all my entries at once and let it go as it wants to go. As long as once it's going in my favor, then I do the needful. So how do I hold a trade longer? You need to understand that you're not the one moving the market. The market moves on its own pace. So all you need to do is to follow the pace at which the market moves. Yeah. So first of all, you want to observe, for you to be able to hold a market very long, there are certain factors you need to first of all observe. First of all, you want to ask yourself, where is my take profit level? If you can understand where your take profit level is, it's going to give you the confidence to hold a trade longer. Because when making your analysis, you don't just want to make analysis and place entries from anywhere. No, you want to place entries based on certain facts and certain confluences. Yeah. So for instance, if I go to the 15-minute time frame where I actually took the trade from, all right, on the 15-minute time frame, you get to observe that when I placed this trade here, I had my take profit level to be somewhere around here. All right, so I actually had intention to just place the trade here and probably take profits somewhere around here. Okay, so that is my idea. I have a place I want to take profit from, and that place is quite a little bit high above where I took my entry from. But now what happened? When the price got to that zone, what I do is to lock my profits. So what I have to do is I would have to take my stop loss. Probably, you know, when you place your trade newly, your stop loss is going to be below. But the moment your price starts going in your favor, you drag your stop loss high a little bit. So what I usually do is I'll take my stop loss and put it above my entry zone. All right, then keep observing the markets. Now, so when I observed that the price came here, had a little reaction, broke through this zone, which was formerly my take profit zone, and kept on going, then I realized that, man, this market is actually gonna keep going forward. And that was not just the factor that led me to holding strong. Another factor is looking from the 4-hour time frame. You get to observe that this is a very strong bullish trend. You can see after the double bottom, there was a strong bullish move breaking the structure, and there was a strong bullish move. So this gave me an idea that the bulls are fully in market right now. The bulls are fully in markets. So me understanding that the bulls are fully in the markets, and so me observing that the bulls are fully in the markets, going to the 1 hour time frame before I place that entry, you also observe that there's a good market structural placement here. Here was a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, all right, higher low, and then another higher high. And that's how price kept on going. So when you see a market that has a very good market structural movement, be it going bullish or bearish, just know that that's a good market to place your trade from. So this was a good bullish trend, and that's what gave me the confidence to place the trade at the first place. And then when price broke out of where I was anticipating to take profit from, and I kept on holding stronger. So all I kept on believing is that if price gives me another high and a higher low, keeps going, I'll just have to keep locking my profits gradually. All right. And then one mistake you don't want to do is you don't want to take your stop loss very close to the mouth of the price, because if price comes down just a little bit, it's going to kick you out of the market. So you always want to put it below the structures. For instance, you see this one is below the structure here. The other stop losses are also below the structure here. This one here, I put it below the structure here, because this is actually a structure. If you go to the let's say 5-minute time frame, you get to observe that this is actually a structure. You can see the high, this is a low. So this is actually a structure. You can see the low, and then another move, another high, higher high. Okay, so probably price is creating another structure right now, and who knows, you might get to somewhere here again and start going bullish again. If that happens, what I will have to do is to take the stop losses, bring them over here. All right, when I place this one here, I bring other ones and also place them a little bit below the structures. You can see another spike is beginning to take place again. All right, so if the bulls push up again and break this structure, you need to understand what I mean by structure. All right, this is another structure here. All these are structures. Okay, so as price finds structures and keeps going bullishly, all right, you keep taking advantage of those structures. So the mistake you don't want to do is placing your stop loss above this structure, right? Because you need to understand that before price goes bullishly, it needs to find a support area. So this is kind of like a support area for this current retracement. With this right now, it's giving you a sign that the bulls are gradually coming into the markets, but before they push strong, they need to find a good support zone. So shoot back up. So when they shoot back up, then when they shoot back up and break this other structure here and going up, then you can drag your stop loss and put your stop loss below here, because by that time price is now above here and still going up. So you understand the logic about setting your stop losses. All right, so in this case right now, you might ask, so Tim, why didn't you take your stop loss and put it here? No, you don't have to do that. You know why? This is a 5-minute time frame. All right, this is just a 5-minute time frame, so anything can happen. So I usually use from the 15-minute time frame, actually is where I place my trades. All right, that's where I usually place my trades and monitor the movement. All right, so you can see that from the 15-minute time frame, there's a lot price has to do before it can get to my stop loss. All right, how much more the 1 hour time frame? So that's just a simple logic about holding your trade strong. It's just about trailing your stop loss, but gradually and with logic, with wisdom. You don't just put your stop loss anywhere so that you don't get kicked out of the market. So imagine me placing this trade here since yesterday, and price is currently here, and me using this wisdom to trail my stop losses gradually, and this price keeps going higher and higher. And currently I'm on a $4,000 profit, meaning that if price keeps going higher and higher, I will just have to do what? Keep making more profit. Just out of these 5 trades, I might likely make maybe $6,000 or $7,000 before the bears start pushing down. So that's the simple logic about how to hold your trade stronger. Let me know if you have any question regarding this video right now, and I would love to talk about it in my next video. And a lot of you have been asking me for a mentorship. All right, so I think I'll just have to make out time to give you guys a mentorship as soon as possible, where we all meet on Zoom, and then I teach you all directly how to trade this market. If you guys want the mentorship, I want to see it on the comment section so that I can know that, okay, there's a lot of people who needs this mentorship. If not, we just keep moving on. Yeah, so for the meantime, traders, make sure you stay safe. Don't forget to smash the like button, use the comment section, and I'll see you on the next video.